they might have been cheating you.
Does it really matter whether the company is based in the US, in Europe, or in Asia?
What was presented, for example, by my first fund.
Let's discuss the hot question. And what is A book and B book?
The best companies, they got CEOs, they got people who are not afraid to show their faces, to communicate.
Maybe I will just mention that we always welcome traders in our office. Welcome to Moneymakers. I'm Lenka, and I'm delighted to have a special guest with me today, Adam Dulovec, who is the director of the trading division at Purple Trading, a well-known player in the prop trading industry. Recent developments in the world of trading have piqued our interest, leaving many of you with doubts and questions. In today's interview, Adam will provide insights into the prop trading landscape, delve into important industry events, demystify the relationship between brokers and prop firms, explore concepts like A book and B book, and offer a deep dive analysis of the MyForex funds case. So stay tuned for this exciting interview. And don't forget to like, subscribe, and hit the bell for notifications. Hello, Adam. Thank you for coming to our studio.
Hi, Lenka, and thank you for having me.
You have been in the prop trading industry since 2015. So tell us a little bit about the industry, because Billions Club and a prop trading firm, it's pretty new to the market. When did it all start?
Yeah, just like you said, I've been in the trading industry since 2015 in the brokerage business. And as I started working with the Purple Trading Company, we had a relationship with local business partners, let's say, and they had this idea about the modern prop firm and the prop firm company as it works like Billions Club and the other as we know it today. So it's like 2016, 2017, we were evaluating this idea, and it was a great idea in the moment. But in that moment also, traders were happy with the trading industry, how it worked, and they didn't have much, need or, didn't have to look for other solutions than they had with the conservative, trading on the forward, the traditional one.
All right. How has the industry evolved over the years? So can you tell us the most important events that have shaped the industry?
Yeah, exactly. Like I said, back in the day, it was just a good idea. But there was several milestones that actually rocketed this prop trading industry, to the state that we are right now. And one of them was 2018 with the European regulator, which is ESMA. They introduced some interventions on the forex markets, especially the leverage. They lowered the leverage that forex brokers could actually offer to retail clients. And with lower leverage, you actually need more capital, to get the same amounts of gains that you are used to. So it was not so effective, for the traders to put so many capital in the account, to get the same gains. So they started to look for other options, So there was one milestone that actually could help the prop trading industry. So several more firms actually entered the industry, to do this business. And then obviously 2020, and there was COVID lockdowns, and that was amazing stuff that was not so good for society, but it was amazing for the online everything, for online e-shops, everything like that, and online business. Obviously prop trading as well, so all of the people, especially in the United States of America, they were locked down at home and they were getting paychecks, they didn't have much, where to spend it. So one of the ways was to put it in the stock market or even to pay for the challenges with prop firms. So that was a great, for all these online business, including prop firms. And ever since that, I believe, there's every month new prop firm in the market because everybody wants to enter this scene the other way.
Do you know how many prop firms are there right now?
Right now, like I said, 5 years ago, it was 5, 6 I knew about. Right now, it will be over 100, definitely.
Wow. What have been the biggest challenges that the industry has encountered?
Yeah, there were not much challenges, to be honest, for the prop firm industry. It's very young. It's very new. One of them, definitely the competition, because like I said, almost every month, there's a new prop firm that has both online, that they are looking for traders. We as a Purple Trading who provides the brokerage solution, we get the inquiries for the infrastructure, for the new prop firms like every day on our email, so there's a lot of demand from people having the new prop firms ready.
If we talk about risks, what risks are associated with prop firms?
There's a lot of risks. We can see it actually. What kind of people that are actually want to start a company? They don't have experience with that. They maybe worked for the company like that. Like some other prop firm, and they just knew a part of it, and then want to start their own. But they are very naive. They are not ready for the global aspect, for example, because when you run a prop trading company, you are usually running it worldwide. You expect a lot of customers to come to you, maybe even from day one, if you are lucky, but you have to be ready for it. Both in the human capacities, you have to cover the support, you have to cover the trading accounts with your capital, obviously, so there's a lot of stuff that you need to be ready, and there's a lot of risk. If you are not prepared for that, you might end up very soon.
If you talk about the emerging trends, what are some of the emerging trends that are right now?
Yeah, the trends, as I see, there's been a lot of changes in the rules, in the challenges, for example. I see, back in the day when I was trying to challenge, with some other company, when I was trading a lot, there was this requirement to have 10 trading days. Now I see it's 4, 3, or even 1 trading day, with some companies, or no limit for that. You can do 1 trade, do your profit target, and you are in. That's the rule that's probably changing a lot. But in general, I can see there's a lot of transparency across the teams, especially right now after what happened to my Forex fund. When they were telling people that business model works somehow, in reality, it was probably different. So a lot of companies are trying to educate the clients and tell them how it really works. So the transparency is in.
What are some of the red flags that actual traders that want to buy a challenge should look for?
Yeah, you definitely, when there's so many options, to go for, you need to choose the right one, and what are checklists, what I would check for, is definitely, I want to know who are the people, because after all, the people behind the company, it's that who are you dealing with, every prop firm company, like every brokerage company, the technology, it's more or less the same, but the people who run it, they are the guarantee of that, so the best companies, they got CEOs, they got people who are not afraid to show their faces, to communicate. They got customer support that communicate. They are reachable. That's very, very important for, from my point of view. This kind. They got the location. The company where they are located. You can even visit them. But this is more like online business. But you can, who is behind the business. That's important. They got the rules, transparency, everything. They communicate with the trading rules, how to do it, what are the rules for the challenge to pass it, and so on. So that's the thing which you should consider. And of course, you don't know until you try, But what is good, if you've got people around you, like in your circle, in your friends, online, look for references, because you can find a lot of references, Trustpilot, YouTube, wherever, Facebook groups. Look for that, that's how you can find a reliable prop firm.
Yeah. Maybe I will just mention that we always welcome traders in our office. So if you want to come, don't hesitate and come and visit us in the studio or in our office. If I looked up the definition, I found a company that provides its traders with access to capital in a return for a percentage of the profits generated. So what is a prop firm? And is there a big difference between a modern prop firm and the old-fashioned one?
Yeah, there is a huge difference, to be honest. And there's a lot of differences, in different aspects, considering the old-fashioned, like you say, old-fashioned prop trading, it's like a hedge fund or investment banking, to get that, there is a barrier to entry. You need a college degree, you need some experience, you need a reference, you need to get, networking to even get to the interview, then you get hired and go through a training, they teach you a strategy, and then you get your salary, fixed salary, maybe some bonuses depending on your performance. That's it. You work there from the office. But this prop trading industry that we are considering here, we call it prop 2.0 or modern prop firm. It's completely different. You don't need this college degree. You just need a strategy that works, and that will pass sort of a challenge. So you will prove your trading skills from your home, from your computer, and just get hired from that. You don't get fixed salary or nothing like that. You just get your payout, which is basically a split from profit. So that's it. But the biggest difference is that In the old fashion, you go there and you trade in companies' money. You gather capital and you do something with that on the real market. But with the modern prop trading, and that's important to say because, like I said, a month ago, probably most of the traders didn't know how the business model works. But with the modern prop trading, you never get the real money on your account. You are basically on a demo account, and you are just providing the prop firm with signals when to buy and sell. And it's up to the prop trading firm, to consider some of your trades, the signals, and put them on their coverage account, with the broker on the real market. So that's the difference. You never get the real money in your account.
Aside that you mentioned how the prop firm works, that there is a big difference. Like let's say 2-3 months ago, that people didn't know that actually you trade with a demo account, right? Not with real money. Can you tell me what is the relationship between a broker and a prop firm?
Yeah, there is a relationship. There's actually two ways of the relationship. One of them is that the brokerage company is sharing its infrastructure with the prop firm. It means they are renting it for a fee. And the renting, it means they provide them with an API connection. So they get access to some certain function of the trading servers. It means they can open the accounts from their interface. So when I go to Billions Club website and I open the challenge, it automatically opens the demo account with purple trading. You get the access there to monitor the trading, to evaluate the trading, if you haven't breached the rules, the drawdown and so on. And then, it's connected to the client's portal. So the traders can actually see it in the dashboard. That's one part. The other part is for the live trading, and the prop trading company is a client of a brokerage company opening an account with real money when they just open the trades based on the signals from the traders that are actually on the third phase or the final phase, let's say funded, or how do you call it?
If we talk about the location where the prop firm is based, does it really matter whether the company is based in the US, in Europe, or in Asia?
No. I would say it doesn't really matter, but considering the fact what happened to my Forex fund right now, I would say that the US-based company might be more under, the surveillance of regulators, the CFTC or SEC, in the future, because they already started, so that might be sort of different, but otherwise I think it doesn't really matter.
Some people, they think that a prop trading firm might be a scam. So what would you tell to a trader who thinks so?
Yeah, I would say it might be. Obviously, like everything might be a scam, you never know. But to be honest, this business model has been here for some time already, and it works, and personally, I got friends that do this prop trading for a living. They just make money, they do nothing else, and they've been doing it for years already, so definitely some of the trading companies, they do the payouts. I heard that there are companies that they delay payment, they don't even do the payouts, they just promise it and never really do. It might be a scam, and it comes back again to the red flags that I mentioned before. It's all about the people, that are behind the firm. If you think these people are more wise, they are okay, you can go with them. And then after all, it's up to have a personal experience, so go there, start small, invest with the small challenge, check if you can get the payout, get references. And
I know that you are the director of trading division. Have you ever had a funded account yourself?
Actually, I tried a lot of challenges back in the day. To be honest, I never made it to the final phase. But it's been some time ago, and the rules were much more stricter, and I never lost it. I was always in the in the result that I could do it again for free, but I've been doing it like 4 or 5 times. So I was like, okay, maybe it's not for me, not for my trading style. That's, to be honest, that's not for everybody. Somebody can be a successful trader in their own account, but when they trade for prop trading firm and they got this limit, the drawdown and stuff like that, and to make 10% in 1 month, it's not easy, to make 10%, especially if we got 10% drawdown restriction, then it's not so easy. So maybe even successful traders on their own account, might not make it, like I was back in the day.
I went through some Facebook discussions and I found, I quoted, when some of their traders showed consistently profitable, they systematically and deliberately fought and cheated them out. So how could a prop firm cheat someone out of their profits? So can you explain it to me?
Yeah, I mean, there is a lot of terms. So, yeah, they can basically manipulate everything. That technically wise, it's possible. It's possible, especially with those companies that use in-house brokerage solution. That they don't have a third party like Billions Club does have a proper trading. They got the in-house solution, so basically they are in control what to do with the traders setting on the accounts. In terms of spread, they can widen the spread, they can increase the slippage. That can happen. It's technically wise, it's possible. So that might be some of those let's say tools how to do it unfavorable for the trader. And after all, we can see it in the MyForex fund. What happened, to them is they've been accused that they used the slippage for the traders to make them less profitable, or even to lose money, so they don't have to do the payouts. That's in the file. So
okay,
that probably happened.
You mentioned slippage, so some people might not know what it means. So can you explain it?
Yeah, I can go more in depth later, maybe, but just briefly to understand that is the difference between the price you see in the platform and the real price you are executed on. So you don't always get the price in the real market that you see in the platform. You just get a different price. It depends on liquidity, volatility, and so on.
If we talk about expert advisors in training, what are they and how do they work?
Yeah, expert advisors, basically, they are no magic. It's algorithmic trading. Basically, if you can code or know somebody who can code, or even hire people who can code for you, you can use any of the coding language, set up a prompt, and then this expert advisor, which is sort of a program or robot, he can do this for you, and you don't have to do it manually. You don't have to be there and click it. You just set up the parameters, and it trades for you. Some of the companies, the prop trading companies, don't allow the traders to use it. Here in proper trading, we always give them, the chance to choose whether to use it or not. Using the EAs, it's more easy to use EAs for those abusers who are using high frequency trading, and trying to arbitrage the funded account, because they're on the demo, and the prop trading company is using the coverage account on the real market. So there's slightly different, and they might be using these systems, to arbitrage the prices.
Let's move from prop firms to brokers. What is the difference between brokers and liquidity providers?
Basically, not much. Liquidity provider, let's consider it as a broker of a broker, or usually they act as a market maker, and it's a place where broker goes to execute its trades. So let's call it prime broker, somebody who's above the broker in the structure. Actually, there can be a cascade of more providers, or there can be just one above the broker, or not at all. It depends what model the broker is using.
Also, I'm interested, what are the costs associated with the brokerage solution provided to prop firms? You already mentioned it a little bit in the earlier.
Yeah, definitely there is a cost. That's our business. What do we do with the prop firms? We provide them with the structure, and we get a fee for that. I'm not going to say how much is that. It's part of our business secret, but there's definitely some fixed cost that we get paid for providing the infrastructure or the technology. And there's also variable cost that we charge, for the amount of the demo accounts the prop firm is using.
Some people are very interested in how does API connection work. So maybe for our geeks, can you explain?
Yeah, it's more of an IT question. So, gentlemen, I'm not sure I'm the one who is the best to explain that, but it's basically the type of a connection where the different application gets some sort of key, some connection where they can exchange information between each other. So basically that's it. That's what we are using, with the prop firms, so they don't have to do everything manually, open the accounts for traders manually with assistance. They just do this API connection. So directly when they open the challenge with you, they open the account and they get the credentials and so on. And it's all works thanks to API.
Let's discuss the hot question. And what is A book and B book? I know that everyone is discussing this topic, so let's clarify it.
Yeah, for brokers. Okay, so basically there are different type of brokers. I don't want to say some model is better than the other. They got pros and cons, and can tell them later. But generally speaking, a book broker is just a middleman between trader and the market. The market might be a liquidity provider or some exchange. So they just act as somebody who trades, who takes the order from the client and sends it to the market, charges a commission for that. That's easy. The other model, they call it B-book. We can call it market maker, or somebody who has a license for dealing on own account. It means that they are taking the counterparty of the trade. So basically, when you go with B-book broker or you are with a B-book model, you go there, you open a buy order, and market maker is taking the other side. So basically, they are sell. What they do next is they probably hedge it somewhere with a liquidity provider, market maker, market, or somewhere, doesn't matter. Or they do not. It's up to them. It's up to their risk management, how they evaluate you as a trader, whether they want to be the other side, whether they think you are the one who is not potentially profitable, or whether they want to hedge you because you might make some profit.
And the purple trading is a
Yeah, we are a book. We are STP. You can actually find it in Europe. You can find it because we are all regulated in Europe, and every European regulated broker has to make this information public. You can find it. There's a report called RTS 28. And every European regulated company has to make it publicly on the website. Accessible for the client, so you can go there, check it, check the execution venues, who are the liquidity providers. And
so it's pretty easy to find.
It's pretty easy to find, yeah. And what I want to say, this A-book and B-book, but there's also a hybrid model, and the hybrid model basically works. This basically most of the huge brokers, they are working with the hybrid model. So when they get profitable clients, they send them to the market, charge the commission. When they get clients who they think they are not profitable, they just take the other part. It's got the pros and cons, the both parts. But there's one story that actually I've been hearing from clients, and that's that they've been trading with some broker, let's say, and they've been doing good. And when they start making money, when it's time to be profitable, the condition got worse. Definitely got slippage and so on. And they are like, oh, they might have been cheating me, everything,
How is that possible?
But they might have been cheating you. They might do some unfavorable, let's say, technical stuff that is against you. But the explanation might be more, let's say, rational, and it's that they probably switched you from B-book to A-book. And now you are not trading on against the market maker, which can provide you with a lower commission, a lower spread, and so on. You are going to the market, and they might be higher slippage because there's a real market condition. So it can get even worse because of that. So that might be the true market reality, which STP clients, like we have, they know from the beginning because we put them all on the A-book,
All right. And most of the brokers, they are A or B?
Most of the brokers, let's say, they start with the STP or A-book because it's way much more cheaper, But when you're growing and the client's database is growing, it's better to be probably B-book, because then you get more clients. And when you get orders from clients, especially, this is one client doing a buy trade, this one is doing sell trade on the same instrument, mostly, let's say, the same volume, you can just net these positions, and this is how you actually manage your exposure, to the market. So it's easier, to manage your risk when you got a huge amount of clients. So when you're growing as a company, you probably end up in a point when it's better for you, costly wise, to be the big book broker, and then it's up to everybody who's behind the company again, to not be in the conflict of interest and, and not be tested, to do something against the clients because they are taking the counterparty, just to hedge it or just consider it somehow. But yeah, there's this. But like I say, the pros of the A-book is there's technically no conflict of interest. Of the B-book, there is lower cost. So the hybrid in the end for the clients.
But now for clients, you mean as a broker, right? But if we look at it from the trader's perspective, so what is better for me if the broker is A-book or B-book?
Yeah, like I say, if you go there, you probably trade, let's say, not very much profitable, you want low commission and so on, you go with the market maker, and you get that. If you want a professional condition, and you want to be trader as a professional, you go with a book. But it doesn't mean that every B-book or, market maker broker is bad. There is a potential conflict of interest always, but, there has been so many market makers that were good, and they managed to lower the cost for the traders, So in the end, it comes to the people.
You mentioned A-book, B-book broker, but what about prop firm, A-book, B-book prop firm?
It's different, let's say, because, it's not so much about A-booking, B-booking. When you are a trader at a prop firm, you're basically just on a demo account. You're not on a live. You get a virtual capital. So you're just providing the signals, like I said before. And this signal, the prop trading company, they decide whether to use it on the coverage account, or the margin account. That's how they manage the liquidity. If they do what was presented, for example, by my Forex fund, that they give you the live accounts, put you in the market, and you are trading with a live account every of your trade, it would probably cost the prop trading a lot of money, because the traders in general are not so much profitable. So they just choose the right trades, to gain the capital probably on the market.
How is it possible that the price might be sometimes different? I mean, like if I'm a trader, I have 3 different accounts, like funded accounts, 3 different prop firms, and then when I open the same trade, I see different prices. How is it possible?
It comes back to the brokers. It depends what broker is the company using. What is the data feed? Where is the data feed coming from? Usually here we are speaking about CFD markets. CFD is decentralized. Unlike, for example, stock exchange. When you get a stock listed on New York Stock Exchange, you get every trade cleared in the stock, and the price, because it's there on the stock during its trading hours. But here in CFD, and you can imagine as a Forex market, Forex market, basically there is an exchange office down the street, it is the market, they sell you euros for dollars and everything for this price. And around the corner, there is another exchange office, and they might have a different price. And across the town, there are so many of these, and each of these has a different price. And across the globe, there might be another one, a different price, on the Forex market. Of course, they might be somewhat similar because of the arbitrage and so on, but they might be a little bit different. So with these decentralized markets, every broker might have a little bit different price, and every prop firm might use a different provider. So that's the reason why the price might be.
When you talk about funded accounts, when I place an order, what happens afterwards?
Yeah, so regarding these funded accounts with the prop firms, like I said, it's a demo account, so trade doesn't go directly to the market. It's up to the firm whether they consider to copy this trade, use your signal in the coverage account. But what's important to say, even though it's a demo account, we got a tool that makes this demo account to behave like a live account. It means it takes the liquidity from the live market, the depth of market, and let's say some sort of every delay, and puts you on the live trading account with the prop firm. Even though it's not live, it's demo, it behaves like a live. It's because when the prop firm wants to copy the signal on his coverage account and put it to the market, there's no difference, not much difference, of what you get as a price and what is your profit and what is the actual profit in the market for the prop firm. So this is a tool that we develop, just to make it more real trading in environment for the funded traders.
I would like to discuss also some terms, so such as spread. So what is spread in Forex?
Okay, so it's let's say basic stuff, that everybody should understand, but we still got clients who've been trading for some years. They don't basically understand the basic terms. So let's start with spread. Spread basically. I like to explain this really like basically. Let's explain on a story. Okay, so imagine
we love stories.
All right. So imagine you are somewhere in a town, no computers and so on, and you want to go and buy something in the market. Let's stay in the financial sector and buy stocks. You want to buy stocks from a company A. Doesn't really matter. So come to a place with no computer or platform. Just come to a place where the market is, where the trading is happening, and you want to buy 5 shares of this particular stock. And there's a guy, you see a guy who's holding a board that he wants to sell 5 shares that you want of this company A, and he's offering it at the price of $100 per share, but it's your 5 shares, it's $500 together. You don't want to spend that much money, right? You want to spend, let's say, 400, so you need the lower price. Okay, so you say, this guy is offering, but there might be other people in the town, they might come during the day, so I will just wait here, I stand in, so take a board right there that you want to buy, 5 shares of this particular company for $80 each, so, and you stand there next to him, so you are staying close to each other, and you are creating the market, basically that I come there, as a third person, and I can see you are there for the company A, that you want to buy this stock, you are bidding for them. Bidding this price like an auction. You're giving 80. There's the best offer right now in the market for somebody who wants to sell it. You're giving 80 per share. This guy is doing 100. So this is the bid price, and he's asking 100 for the shares that he wants to sell. So it's the ask price. The ask price is when I want to buy something. From these guys that is asking so much, so that it's ask price, and yours is bid price. And there's the two price that creates the spread. That's important because when I open the trading platform, some platform by default, they only got one price. They got the bid price. So then I want to trade some small time frame, let's say 1 hit time frame, so the spread is, let's say, bigger visually, but I don't see it. And then I open a trade, which is buy trade, but I see the bid price, which is basically when I want to sell. So I open it, the price is completely, different. It's not what I see on the chart. And that's it, because I don't see the ask line. You got to go to settings, make it visible, and then you see that there was another price that you were buying for. So basically, this is the spread, the $20 between this. Theoretically, $20.
Also, a hot topic, slippage. So let's talk about slippage.
Just let me continue with this story.
Oh, sorry.
It's okay. So I come there, and I want the shares too, just like you do. I want 5 shares of this company A, but for me it's too much as well, what this guy is asking. But I'm willing to, offer more, so I offer $90, let's say. So I go there, stand next to you, maybe in front of you, because I got better offer, better bid, so I'm increasing the bid price. So right now the spread is even moving, that's what we see in the platform, in the real market. And when I came there, I'm there, 90% the best bid, 100 from the guy is the best ask price. So the spread now is 10, and that's happening during the day in the market, and the spread is fluctuating. It's not flat, it's always changing how the participants actually come to the market and they are leaving, So that's there. And, this is about the slippage, the part that you asked for. There's another guy coming to the market, and he's got the shares too, and he wants to sell it, just like the other guy. But this one, he needs the money, so he needs to sell fast. So he's accepting the market price, and the best market price, which is there, is my bid price, But the thing is that he wants to sell more than just 5. He wants to say, let's say, 8. Okay, so he wants to sell 8. So he sells it to me for 90. This 1, 2, 3, 4, 5 for 90, and 3 of them he sells to you for 80. So he gets the average price that was available in the market. So it's 5 times 90, 3 times 80, which is 86 something. And that's the average price he gets. He sees in the platform or on the board that I'm holding that there is 90, but the true price he will get, because he's got more to offer than the liquidity is available at this price. So he gets the average price from my and your order. So the average price for him is 86, and the slip or the slippage is for $4 in this case.
When is slippage most likely to happen? Is there like as a trader, can I realize when it's most likely to happen?
Yeah, definitely. The best thing is to see the depth of market, which you don't always get a chance to, especially with decentralized markets. You might see some fraction of the market, unlikely, from the centralized when you go to the stocks and you got all of the orders in one book. But in general speaking, a higher chance for the slippage to be there is when there's a low liquidity. When you come there and the order that enters the market, imagine this guy who is selling 8, and I would be asking me 1, you would be asking me 1, and there were other people just for 1. He gets slipped through all of that. So basically these moments in the market, is usually where the big companies with the big orders, when they withdraw it from the market, when they don't have it pending there, and that's usually where there's some news release, because there's uncertainty between, they don't know what is going to happen, after the news, they don't know what's happened, for example, after market open and the market close, so the liquidity, there's a low liquidity, so there's a high chance that the slippage will be there. Also, low liquidity means there's a lot of volatility, the price is jumping up and down, and there might be other thing that causes the slippage, and there's the delay, even though it might be a millisecond before you get the order from the brokerage, from your brokerage account, to the market and back, but the price might be somewhere else.
How can a trader reduce the impact of slippage? And can I do it?
Yeah, I mean, you cannot eliminate it entirely. It's always there, it's part of the market, it's natural. But you can actually reduce by the way you trade, just don't trade during the news, don't trade during the market open, during the market close, don't trade large orders. If you've got really large orders, just split them, into smaller ones, just bits, that might work.
If we talk about commissions, what are commissions?
Commissions to brokers. Yeah, commissions just basically the thing that you pay for the service that you get. So if you are being executed in the market, there's some cost associated with that, with the liquidity, with bridge, with the connection, everything, and you have to pay the broker for this and for its profit. They got, of course, they got some salaries of the people that are supporting you and so on. So this is covered in the commission that you pay.
I know that some brokers, they claim that they are zero commission brokers. So how do they make money?
Yeah, obviously somewhere.
Yeah, that's why I was asking.
If they are in the game for making money, and there are different ways, how to introduce the commission or the payment from a client. If they got zero commission, they can increase the spread. That's the easiest part. If you got a $10 commission on euro-dollar, you just increase your euro-dollar spread per one pip, and that's the $10. So you don't get 0.3, you got 1.3, and here you got your $10 commission, and you can advertise it, and that's the important thing, right? You can advertise it as a zero commission account, but you pay it in the spread, which might be a problem because sometimes the spread, when it's widening during the news and so on, is widening as a percentage, so percentage from 0.3 and 1.3 can, be different thing for you.
Maybe let's also talk about how do brokers make money. Can you tell us that not everyone probably knows how brokers make money?
Yeah, that's easy. Probably we go back to the A and B book brokers. When you got an A book broker, they make money from your commission. That's what I get from their service. When you got a B book broker, they can make money from the commission that you pay. They can also make money from the trades. They take a counterparty for you, and they don't hedge. Sometimes they hedge it because they think you might be profitable, so they can work with the risk and exposure. But when they see your trading behavior, like I say, there's a huge percentage of traders, and it's not a secret. We need to make it public as a brokers. The number of accounts that were losing money in past 12 months, and the numbers are like 70%, 80%, difference. So they can take other part of these trades, and this is how they make money. But that's not the primary, let's say, this is not the number one priority, how to make money. Usually it's the commission that makes broker living.
Some people, they think that they trade stocks, but they don't actually trade stocks, they trade CFDs. So can you explain what a CFD is?
Yes, CFD, it's a great thing, I would say. No, it's a financial derivative that allows you to speculate on the price of the underlying stock or whatever it is, doesn't have to be stock, without actually owning it. So it's just basically agreement between you and the other party, which is a broker or liquidity provider, about the price right now and in the future. So it's just an agreement on the price movement. That's it. It's got some pros and cons. The pros is the leverage. Definitely, you can manage much more capital. Actually, the order might be much larger than you can actually afford with your small capital. You got access to wide markets, and definitely you can go short and you can go long, just by clicking. It's not this short selling mechanism like with stocks. You just buy or sell. Also, there are cons. Leverage definitely is double sword. You can multiply your profits, but also your losses. It's so definitely needed to say, that this is one of those things that actually make get such a, let's say, not a good reputation among the most experienced trader, because there's a lot of revenue that retail people don't know how to do it, how to manage it. They just see there's opportunity, but don't see the other side of the coin.
Mm-hmm. Adam, the last question, what would you advise to traders who are just starting out?
Oh, just starting out, it's from the beginning, what's important, find the right partner. When you're in trading business, you need a business partner, which is for you a broker or a prop firm or whoever you're trading with, who provides you with that. And it should be a business partner to you, because you do a lot of business together. With us, our clients, they make us a commission, they make us a living. Mm-hmm. We want to provide them with the best possible infrastructure for the trading, so they get best access to the markets, best condition to make them long-term profitable. Because when they are long-term profitable, they keep paying the commission with us, and it's like win-win situation. So find a partner, find a reliable one, and don't let any, let's say, scam company, whatever it means, and don't let them just, give you the bad opinion on this industry. Would it be, prop firm industry or broker?
Perfect. Thank you, Adam. Thank you very much for coming to our studio. I really enjoyed the interview.
Thank you for having me, Anka.